Hi, and good morning to you all. I had a discussion yesterday with a lender that specialises in the SMSF space, self-managed super fund space. And they do loans in other areas as well, but this is something where they probably stand out with a competitive advantage over a lot of other lenders, particularly the main lenders that you see on the high street. Now, in this discussion, we talked around a few issues, and I just thought I'd highlight a couple of them for you. One is that they offer 30-year terms for commercial property loans. Now, I know one of the majors has recently increased their maximum term from 15 to 30 years for commercial property, but these guys have been doing it for some time now. So they're a bit of a trendsetter in that regard, and obviously also for SMSFs, that also might become a key attractive feature for a loan for a particular borrower. Now, SMSFs, self-managed super funds, are typically used by self-employed people, although if a PAYG earner is making self-contributions over and above the employer statutory contribution, then they may also be considering an SMSF, or they might have a balance in their account that might be applicable for them to hold their own SMSF, but often it applies to self-employed people, as I said. So that's one aspect, is the commercial term. The other one that I thought was interesting that came out of our discussion was a loan product that actually is not currently available, probably because of COVID, but is something that they are looking to restart again soon. It was a loan for the GST on a commercial property purchase. So where your commercial property purchase attracts GST, which is where it's not part of a going concern business, then obviously if you're obtaining a loan and you have to fund the GST, that's 10% of the purchase price. With this one here, they will fund that separately. Now, the loan term is 6 months, or was 6 months for this product when it was up and running. And obviously the purpose of that loan was to tie in with the funding cycle for the business from the payment of the GST when they buy the property to when they get their credit back from the tax office in their next BAS cycle. So I thought that was a really interesting innovation and an interesting way of dealing with GST on a large acquisition like a commercial property. That can be a lot of money, GST. If you're buying $1 million property or a $2 million property, that's $100,000 or $200,000 out of your cash flow or out of your borrowing requirements. And if it was typically part of the loan that you were obtaining, then to pay that back over, say, 30 years becomes quite expensive. So, yeah, I thought that was an interesting development. These guys, they're not a major lender. They obtain their money from the wholesale markets. So it was kind of an interesting discussion around what their limitations are on what they can lend money for. Because their deals are effectively prescribed by the terms of what they get their money for. So they get their money from the wholesale markets under certain requirements that they comply with in terms of how they lend it out, and that allows them to get access to this money. Okay, so that's it for now. All the best. Take care. Cheers.